right, everyone, this is Vishal from Equity Guru, and welcome to another Chart Attack video here. We got to talk about the equity markets, and a lot has happened since the last video that we've done on equity markets. If you guys recall, we were talking about this major weekly level here on the 4,300 zone on not just this market, but not just on the S&P 500, sorry, but on the NASDAQ and also on the Dow Jones. We were saying, watch those weekly charts. Still, levels have to be taken out in order to flip bullish on the longer term. All those daily moves we were watching were all these relief rallies, but the longer term charts are what are very important. And we are taking a look at the S&P 500 here on the weekly charts. And notice something you see here on the S&P 500. Notice something you see here on the NASDAQ. And also notice what you see here on the Dow Jones. Basically, all three global or all three large US stock market indices are testing their major support levels, basically testing previous lows for this year, which was around June. You can see here the Dow Jones actually, in fact, created new lows, but the NASDAQ and the S&P are just, holding that support level. So basically, if we now bring it down to the daily chart, which is, the charts that most of us tend to follow and trade, obviously you can see those 5 red days in a row, big sell-off. We talked about this major support actually being taken out back in, what was this? That was on September 15th. And basically just, typical breakdown. We watch the next price target is whatever is support, and basically, resistance is your price ceiling. So it's something we've covered many times, very basic technicals. Whenever we see support break, it's usually a good time to short. Whenever we see resistance break or the price ceiling above break, it's usually a good time to, buy the asset, right? It's not always the case. Obviously, there's certain things we look for, but when we're in a trending market, those are what we look for our triggers. So as you guys can see here, all the equity markets, as I showed you guys on the weekly chart, they are now grinding at a major support level, which was those previous June levels. And you can see here on the day that we're recording, there's actually a nice strong green candle. We were up above 1.5% and more on all three equity markets, actually more close to 2% on most of the equity markets. So a nice green day here. But the big question is this the bottom? Because generally at support, markets tend to see an exhaustion of selling, right? Support is generally where people take their short profits, and is also an area where a lot of traders look to buy into the stock, into whatever asset or whatever chart you're looking at. So in this case, you can see here the last time the NASDAQ was at the support level, we had quite the nice bounce higher. So is history going to repeat itself? Are we going to bounce at this support level? That is the big question here. But I think, you have to look at what's going on the central bank side of things, right? We're hearing about more rate hikes. The Fed is still going to be raising interest rates. A lot of people are predicting or, trying to basically predict this Fed pivot, right? They believe that the central banks are going to pivot soon because of a recession. And when that happens, you're going to see cheap money. And when that cheap money comes back in, markets will be ready to go. But I would just advise some caution on that. I think that the central banks are sort of making it clear that they are going to raise rates higher than expected. And we've seen many people basically get the wrong side of the market trying to predict the pivot, and the Fed just keeps coming out and becoming more hawkish and hawkish. So I'm looking at this with some caution. I'm thinking we might be seeing some sort of dead cat bounce on all of these markets. And really what I want to see personally is on the S&P 500, we need to take out this 3,900 level. What was once resistance, was once support is now resistance. It acted as resistance here before on September 19th and 20th. I want to see that level be taken out, and you can see the same sort of levels apply on all the other charts. So I can draw my resistance here on the NASDAQ, and that comes about to 12,000 on the NASDAQ. And the Dow is sort of, it deserves its whole video perhaps, because we've actually broken below previous support on the daily, and this is what you'd expect to see on a retest before we see a drop further. So the next few days for the Dow is going to be very important. If we do see a sell-off here on the Dow, very good chance the other markets will sell off. But if we can see the the Dow reclaim this 29,000 to 30,000 zone, I think you can say that we might be in for a bit of a higher relief rally in the equity markets. But two more charts that I need to cover. All you guys who read my work on Equity Guru know that there are two charts that we always follow, which will predict where markets are going. So one is the US dollar index, and I will show you guys that dollar index. Very, very strong, major breakout at 110 on the dollar. You can see here, as the markets were up green, you're seeing the opposite here on the dollar index. There's a large red candle, and I do think this is just a pullback, unfortunately, in the dollar before we see a reversal and we continue higher, which again coincides with the markets having a bit of a relief rally to those resistance levels before selling off again. So if the dollar closes below 110, then we can start to say, okay, these markets have a lot more room to go higher, possibly even taking out new record highs. But again, we'll have to look at that when we get technical confluences that support that case. And then I think the most important chart, and that is, of course, that US 10-year yield, which everything, is about interest rates. I'm going to do another video on interest rates in a specific country. But when you see yields rise, it will put pressure on the stock market. So just as we're seeing that relief in the dollar, we are seeing a relief in the 10-year yield, which hit 4% today. And we are now back at 3.73%. So that's a big drop in 10-year yields. The bond markets, when they move like that, that's a lot of money doing that. So I would watch this level, which is about the 3.50 level. And if we can break below that, then there's a higher chance that the markets are about to reverse. But as of now, I am thinking that the equity markets are doing a bit of a dead cat bounce or a relief rally, as are the US 10-year yield and that US dollar. So just a bit of a relief because nothing moves up forever in a straight line. And once the dollar and the 10-year yield begin to turn and move higher, that unfortunately will put more pressure on the equity markets. So watch those major resistance levels on the equity charts, but I think more importantly, watch 3.50 on the US 10-year, and then look and watch 110 on that US dollar chart, because that is where you will get your triggers or your confirmation triggers or your reversal confirmations for the equity markets. Crazy times, I know, folks, but I think, sometimes it's good to just be a bit patient with your setups, wait for these pullbacks. There's been a lot of major FOMO going on in the markets, especially on the currency side of things, and I advise not to chase a lot of things. Just be patient, give markets a few days to basically stabilize, and then watch for a new trend as they develop. But that's it for me, folks. Let me know what you guys think about markets. Do you guys think that this is the bottom for the stock markets, or do you think that this is indeed just a bit of a dead cat bounce? Let me know in the comments. I'll be sure to read them. Give the video a thumbs up. Be sure to follow, and I'll see you guys in the next Chart Attack video.